What is going on, investors? Back again. Time to do a stock analysis. Seems like we haven't done one of these in about a week. More traditional analysis here. We're going to take a look at Slack Technologies, ticker symbol WORK. They just reported earnings after today's bell. We'll jump into the press release, just see why the stock is trading off heavily. You see here in the after hours, the stock is down huge, 17% in the after hours. This is on the heels of a day where the market just sold off big time. NASDAQ was down 4%. S&P 500 was down 2.78%. Interesting enough, work was up on the day. My guess is this was probably some short covering. People didn't necessarily want to be holding. Obviously, that trade would have worked out, but in terms of maybe hedging their bets, they probably had to buy the stock on a day like today where they're reporting earnings. So terrible print after the earnings. We'll discuss why that is. We'll jump into the actual numbers here, jump into the revenue, the profits, what their expenses were like, see if we can see anything there. And then finally, we'll jump over to the stock chart. I think this is super interesting. It's actually approaching a zone where if you do like Slack, we might be able to pick this one up. So Slack, obviously a company similar to, Microsoft has a Teams product. CRM has products that are somewhat similar. Slack definitely stands alone, targeting typically more smaller companies, startups and things like that. That's their bread and butter customer, in my opinion. So we see off big in the after hours, 17%. Part of it is the calculated billings came in at 218 million, and the street or the estimates came in around 226 million. So that's actually quite a bit off from what they were predicting there. The other thing that I think people are seeing is, notice in the quarter revenue, we were up 48.9% in the quarter year over year. So that's obviously positive. Any company that's growing their revenue that quickly is a positive. But then we've got Fiscal Outlook here in the press release. We've got total revenue coming in at 32 to 33%. So we're actually slowing our revenue growth. And we see for a full year, they're slated to grow 38 to 39%. Still phenomenal growth. But I think some investors might be thinking, well, look, maybe this work from home trend or this, work out of the office trend is not going to be picking up for Slack. Maybe a lot of startups and things aren't going to be allocating their budget to things like Slack. And so we're seeing maybe a slowing of the revenue growth rate, which definitely is going to send shares down, in my opinion, on a company like this. So we jump into the numbers here. We've got our statement of operations here. We've got 3 months ended here, 19 and 20. They also give us a 6-month view here, 19 and 20 as well. We see revenue grew nicely. Like they said, I think it was like the 49% range. We went from 144 up to $216 million. This is an extraordinarily high margin business, which would explain why the stock did have a nice run up leading into earnings and through courses of this year. Because take a look, we only spent $28 million to make $215. That's actually less money than we spent in the previous period, where we spent 31 to make 144. So we spent even less on this cost of revenue. That's a really positive sign, in my opinion, of this company. High margin business. If they can keep growing that top line, it should eventually flow to the bottom line. Now, we take a look at operating expenses here in the quarter. Some interesting stuff happened. We spent $217 on R&D. Now we're down to 94. Probably some stock-based compensation baked into these numbers. Realize when you see these numbers, especially a younger company like Slack, this is not all cash. I know I'm reading this like dollars, but they sometimes include stock-based compensation here. Now, the thing you want to keep in mind is, look, you got to pay your employees one way or another. And as Slack stock was here today up in the $28, $30 range, and it's all the way down here to 24. So if it keeps that trend up, guess what? You're not going to be able to pay your employees in Slack stock because they're not going to want something that declines that much. They're going to want cash. So that's just something that you want to keep in mind here. We see sales and marketing actually went down as well. General administrative went way down, 123 to 52. My guess is these expenses were bloated in the last year, maybe due to the IPO, maybe due to them kind of ramping up their business. I don't know if these expenses are going to be more normalized. These are things you can maybe find out about on the conference call and digging into this company a little bit more. These videos aren't meant to give you the full due diligence that you need to do do with these companies. It is on you, the investor, to do that extra mile to really get to know these companies. I'm just telling you that's what I would definitely look into after I saw these numbers, is see what management has to say about these expenses, because this is really nice. We went from 477 in total operating expenses, that's 477 million, down to 256. And so that really affected our operating profit, or in this case, a loss. We went from minus 363 million, losing that much, now to losing a reasonable 68 million. Now, again, they're guiding in the next quarter to do between 222 and 225. So they're guiding to do about $10 million more here. So if all these expenses stay about the same, then again, we're going to be improving, not to an operating profit quite yet, but we are going to be on our way to that. So that is very good. Now, from a net loss perspective, we pay some taxes and some interest and things like that. We move down here to net loss right here. In the quarter, we went from 360 down to 73. So a positive trend, in my opinion. The other thing you want to keep in mind with these younger companies is the weighted average shares outstanding. You are being diluted like pouring Coke into a glass of water, okay? It's not going to taste as good. You got 368 million shares, or maybe this is 100,000, except share data. So we had 368,000 shares. Now we're up to 564,000 shares in the most recent quarter. That is almost, I guess that's roughly 50% dilution. So you're going to see a little bit of that pressure as well. That's why we don't pay attention to earnings per share, because it's just this denominator here just throws that all off. Now, from a balance sheet perspective, everything is all good with this company because they just recently IPO'd. You expect that the balance sheet to be absolutely sensational. So you went from January here to July. So we've got a 6-month view here. We had cash and cash equivalents back in these days about, that's 700, maybe call it 800 million. We're up to 1.5 billion dollars in cash for Slack. They've got plenty of cash on the balance sheet. From a liability perspective, I'm not expecting to see a whole lot here. We've got some payables. We've got some other liabilities. Nothing really here. So we have these convertible senior notes that probably help flow to the cash on the balance sheet as well. We've got 1.3 billion in total liabilities. They have plenty of cash to cover that. Now, from a cash flow perspective, that's also something that you want to keep in mind. Remember that our net income really improved, okay? And here's where you can find out if a lot of it was stock-based compensation. So you have stock-based compensation right here. Notice, look how much we compensated. So as I assumed, a lot of those expenses were related to some stock-based compensation. They were rewarding the employees, etc., kind of getting the company maybe close to public. This might even be after they went public. So that ticked down obviously big time in the quarter. So it'd be interesting if this 60 million in stock-based compensation is a more normalized rate, because you could take a look at what it does from cash flows. We had 321,000 in cash flows, and it ticked all the way up to 14 million. That is very positive. On the 6-month, we went from 13.8 up to 23 million. So, but the thing you want to keep in mind, the cash flows look good. The balance sheet looks good. Well, the loss from operations really improved. Okay. So I just talked about a lot of positive things. But again, the stock is down 16% in the after hours. So that's what you need to train yourself as an investor. Say, hey, this is good. I like this. I like this. I like this. But what does the market like? Because that's all that matters. It doesn't matter what I like or what you like. It's what the market likes. What the market likes is this calculated billings, and they did not like it coming under. Now, if Work had reported 2 weeks ago when the market was just going up every single day, maybe the stock would have traded up. But in today's market where we're at right now, this stock got rejected heavily. I think also it's coming in weak on this guidance here. So our revenue was a 48% clip in the previous period. And now again, we're coming down to this mid to high 30s on a year over year and a quarter over quarter growth. I think that's what investors are seeing too, and they're not super excited about it. Now, things you can get super excited about if you're a work investor or you want to jump into this stock. Unfortunately, if you bought shares up here, I think even the IPO price of this company was higher than this. Now this stock has sold off tremendously. Again, we were up here in this $30 range. In fact, the stock kind of wavered in this $30 to $35 range for quite some time. I think even past the last earnings this company, but it dropped completely below a zone. So I had a zone here right under 28 to 23. I mean, that's kind of a big zone. You could probably shrink this down to maybe like 26 to 23. That was a good zone. I think if you wanted to accumulate some shares, you probably can make that argument. So it dropped all the way down here to the bottom of this zone. I kind of like that. I'd actually expect shares to find some support here at the $23, $24 level. Now, for some reason, the market keeps selling off. They reject Slack even more. This stock could come down into this zone where I think you're looking at, just under $20 per share. Again, up to $23, $24. I would be more aggressive buying the stock down in this area. But even in this area, I think if you want $1,000 of Slack, which would be, I guess, about 50 shares maybe, I think you could be a little bit more aggressive down in this range and even more aggressive down in this range. Again, this is if you're bullish the company. Personally, I think there's too many competing products with Slack. I think they're a niche that is going to be around, but I don't know how big they're going to be able to get with competitors like Microsoft and Salesforce and Zoom Video and others that are out there. I actually see Slack as an acquisition target. If this valuation gets pushed down, eventually somebody's going to want to come acquire this company. And to me, that's not a great outcome because you're capping your upside. Somebody comes and makes a bid at this stock for $30. Well, it might be great if you bought under $30, but it would be even better for you as a shareholder if this thing kept running like a Tesla or a Microsoft or an Apple and you made 3,000% on your investment. So I wouldn't necessarily buy it because it might be an acquisition target, but this stock is in kind of approaching kind of two ranges where I think you could make an argument to buy this stock, but just keep in mind investors completely rejected what they had to offer in the after hours in terms of earnings and guidance. So that was Slack Technologies for you. Hopefully you guys enjoy that. Leave me a comment down below, and I'd love to hear from you. Good luck with farming investments.